Intel provided investors a bit more information with regards to the Intel Foundry business. Now, currently the Intel Foundry business is still a small part of Intel, but me as a long-term shareholder in Intel, I do expect that part of the business to be quite substantial in the future. It's one of the main reasons why I invested in Intel when I did, and currently I am seeing some positive momentum with regards to that. Now, that said, it does not mean that there are no risks attached to the future of Intel Foundry. No, it is requiring a lot of investment. It is still quite risky because they need, one, a lot of investments, subsidies, help from the government, and especially to attract clients. They have to attract major clients to use their services. The more clients they can attract, the better it will be for the business, the more profitable that business will become. Because currently, it is not profitable at all. So let's have a look at what they shared. Before doing so, if you enjoy this type of videos, leave it a thumbs up, subscribe for not. We're well on our way to reach 40,000 subscribers, so thank you all for all the support. Want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, Intel outlines financial framework for Foundry business, sets path to margin expansion. Here are a couple of comments from Pat Gelsinger, the CEO. Intel's differentiated position as both a world-class semiconductor manufacturer and a fabless technology leader creates significant opportunities to drive long-term sustainable growth across the two complementary businesses. Implementing this new model marks a key achievement in our IDM 2.0 transformation as we hone our execution engine, stand up the industry's first and only systems foundries with geographically diverse leading-edge manufacturing capacity, and advance our mission to bring AI everywhere. As for the CFO, he says here, the model is designed to unlock significant cost savings, operational efficiencies, and asset value. As it begins to take hold, we expect to accelerate on our path forward, achieving our ambition of 60% non-GAAP gross margins and 40% non-GAAP operating margins in 2030. Now, currently, with regards to Intel Foundry's operating losses are expected to peak in 2024 as Intel completes its 5 nodes in 4 years journey. And the company is driving for Intel Foundry to achieve break-even operating margins midway between now and the end of 2030, when it targets 40% non-GAAP gross margins and 30% non-GAAP operating margins. Intel Foundry currently has an expected lifetime deal value with external customers of more than $15 billion and remains focused on its goal of becoming the world's second largest foundry by 2030. With regards to Intel products, as we said before, Intel products targets 60% non-GAAP gross margin and 40% non-GAAP operating margin by the end of 2030. Still a long way to go. Last announcement here, Intel has appointed the new CFO of Intel Foundry. Flores possesses nearly 30 years of financial experience in semiconductors and technology, including more recently as Chief Financial Officer of Xilinx, a company AMD has recently acquired. Now, more specifically, Intel said the manufacturing unit had $7 billion in operating losses for 2023, a steeper loss than $5.2 billion in operating losses the year before, and as we've just read, 2024 is going to be higher than 2023. Pat also said that the foundry business was weighed down by bad decisions, including 1 year ago against the use of extreme ultraviolet machines, those provided by ASML. While those machines can cost more than $150 million and take quite a long time to assemble, they are more cost effective than earlier chip making tools. Partially as a result of the missteps, Intel has outsourced 30% of the total number of wafers to external contract manufacturers such as TSMC. It aims to bring that number down to roughly 20%. And now that they've made the switch to UAV tools, they say here, in the post-UAV era, we see that we are very competitive now on price, performance, and back to leadership. And in the pre-UAV era, we carried a lot of the cost and were uncompetitive. That's why they probably say that right now, 2024 is going to be peak losses, and then they can take advantage of all the investments, all the work they've been making for the last couple of years. Now, touching back on the geographical advantage that Intel has and why it is very, very important going forward. Well, sadly, yesterday or actually today, depending on where you are around the world, TSMC halts some chip making as Taiwan gauges quake fallout. There was a huge earthquake, 7.4 in magnitude of the East Coast. impacting TSMC's production line, and this will probably impact the likes of Apple and Nvidia and Intel as well. So everybody that is using TSMC will probably get impacted by that. We don't know how long the hold will last, but again, if it's not geopolitical issues, it's going to be something like earthquakes, because believe it or not, Taiwan is in an area where, well, there is a high risk of earthquakes, and if there is a high risk of earthquakes, there's a high risk of tsunamis as well, since it is an island. So diversifying the supply chain around the world, especially for semiconductors, is going to be of extreme importance, which is also why that I think that Intel diversifying its fabs, building those in the United States, in Europe, TSMC doing the same thing, Samsung doing the same thing, is going to be of extreme importance going forward. Now, currently, if you look at the state of Intel, by the way, before the market opens, Intel is down 5.46%, probably also on the news of the earthquake in Taiwan and on the news that they're currently losing quite a lot of money from their foundry business. So currently, if you look at the valuation metrics today compared to its 5-year mean, Intel is much more expensive. And to be honest, it makes sense. The business itself had taken a hit, lots of investments, lots of costs to occur right now, which we're only going to see the positive effect of it later down the road. So as you can see here, forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth. That's the only one that's actually semi-okay at 1.29, but all the rest is higher than the 5-year mean, and free cash flow is actually non-existent right now. If we're looking at the average analyst price target, currently sits at $46.6, representing 6.26% upside, but with the pre-market hit, it's probably going to be a bit closer to 10%. As for what the analysts are expecting in the coming fiscal years, top line growth close to 10% for the coming 2 fiscal years, while EPS is accelerating much faster. So in my opinion, it is way better to look at Intel or what we should expect from Intel going forward instead of just looking at what's happening right now, because you could be missing a big opportunity here. Currently, market cap of $187 billion. I mean, previously, of course, it was much higher, but previously Intel had higher margins, higher revenues, higher income, everything was higher. Now we just have to wait and see if all their investments, all the work they've been doing is going to be generating all of those profits yet again in the years ahead. My bet is on, yes, this is going to happen. Currently, I am experiencing short-term pains and expecting long-term gains. I could be completely wrong, of course. So last thing here, if we look at the graph right now, pre-market, we can see that the stock is back under the 20 and the 50-day moving average. The 200-day moving average sits at $40.41. I hope it can hold that. We've seen that previously the 200-day moving average was a nice little rebound area. Currently, I'm expecting to see the same unless really some more bad news comes out. A month from now, we're getting the next earnings report plus earnings call guidance, which means we'll get way more information with regards to the state of Intel, with regards to the state of their investments, data centers, CPUs, etc. But currently, look out for maybe a rebound around that 200-day moving average. So that will be it for this video. Great to get a bit more information with regards to Intel's foundry business. Although quite small right now, it is going to be extremely important for us, for the world actually, and for investors in the future. Yes, currently the numbers aren't great, but hey, they set their goals currently with the 5 nodes in 4 years, well on track to achieve that. Some said it was impossible. Intel delivered. Yes, the stock might not reflect the best of the best performance, even though if you look at the stock's performance since the lows back in February 2023 and October 2022, the stock has done quite okay. So that will be it for this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.